Well, hello everyone, and welcome back. So it's Sunday evening, and like I did last week, I think it was Monday money setups. But normally, what I do is prepare on Sunday evenings for the week. But Monday is also a day to review based off of what happened Monday morning. Uh, but Sunday is where I kind of like go through where I think things are gonna go, where what lessons I learned, what can I do better, and one of those things that I realized that I've gotten better at um, is understanding fake or false. Let me say fake breakouts. So when you think it's about to break out and then it goes against you, and I have a rule for a method for spotting those out, and that's what I want to share today. So, and then I will go into the other things that um, where I feel like the chart is going to go, and looking at some other charts as well. So the fake breakouts. If you notice on this chart, I'm looking at the 5 minute. I always go to the 4 hour, then down to the 1 hour, then 15 minutes, then the 5 minute. But I'm going to go ahead and just show from the 5 minute chart. So if you notice, like things were going down, right? So it's going down and looked like it could have been breaking out, right? I took the trend line that I originally had on there off, but so when things are going down, I'm looking for, is there ever going to be something that breaks that structure from a continuation of going down? So if you look right here where I have this line that says breaker structure right here, so this is where it went. I'm trying to go fast, where it went up, then down, then up, down, down, like back. It kind of consolidated, then it spiked up, right? And that created a higher high, right? So it's like it went from low to a high versus going from low to another low. And when I see that happen, I automatically will mark it on my chart, and but not immediately go in just because it broke structure. Some people do. They immediately go in, and if that they're more of a risk taker, or either they're just going off of a whim of it breaking structure and thinking that things are about to turn around because it broke structure. And the reason why it can look like it's breaking structure but it's actually not is that they are basically liquidating. So they basically, what I mean by liquidating, they're taking a stop, a buy stop away from someone before the price continues to move down. So if you understand trading is about buyers and sellers. So if you don't have, if you're trying to buy, somebody needs to be selling. And if you're trying to sell, someone needs to be buying at that price that you're trying to sell at. So when they are liquidating, they're trying to find, say for instance, they're liquidating and trying to get a seller, or they're trying to get a buyer so that they can sell at the highest point that they think they can get right now. You will get those spikes, such as let me see, what was I at? Where was I at? Let me kind of point them out. Like right here. Here's one. And here's another one. Bear with me. Right here. And they both on the 5 minute, right? So they even on a lower time frame, you're seeing like spikes or wicks, right? What I mean by wick is like, now this one right here, it was actually the candle, but the whole body was not above that breaker structure. It went above and then it came back down. So if you go to the 15-minute, you will see that you'll see more of the wick where it went above and quickly came back down, and the body of the candles are below that breaker structure. And then it eventually went up and made its way up again. But this is where I can spot out that this was a fake breakout. And my indicator, it's not an indicator, it's the fib. Anything below 50% and it can't get above 50% on the fib retracement is a fake breakout. It is not breaking out. And see, where someone else probably would have thought it was, because if they drew their trend lines, it would probably appear as a breakout. So let's look at what I mean by that. So if I were to draw my trend lines based off of what was happening, right? It clearly looks like we broke out, right? So it came down, came out of that trend line, bounced on that trend line. So most people would think we're reversing, where we have a breaker structure, we're breaking above that trend line. But my key factor to let me know that we probably not is the fact that we could not break above. We wicked above the 50%, but we could never get above there and then bounce off of the 50% fib retracement. So, whereas if you look over here, where it actually did break above the 50% retracement, and then on the lower time frames, it would bounce, right? So, the difference is you still have that trend line. It came out. But before, so it did the break of structure. It came out above, bounced back, bounced up to a little over. And if you notice, that candle right here, the whole body is above the 50%. So now what I'm waiting on is to see if it can bounce and keep bouncing till it bounces above the 38% fib line. And that's when I would enter, when it could not drop below there. And I would move down from the 15, probably all the way down to the 1 minute. Once I saw that happening, even on the 15-minute, I'm going to go to the 1 minute. So here it is where it bounced, came up, bounced again, still above the 38%, bounced again. At the second bounce is where I would have came in. And then when it came above the 50%, it bounced on this order block, right? It bounced on this order block. That was confirmation that, hey, we probably are reversing. So that's the difference in a fake breakout and a real breakout. So fib retracements, especially the 50%, that's why I always, I might change my colors with my charts, but I either have them at red or using my color is pink. So I will have that like really highlighted so I can see, are we still continuing down? Because the reason why the 50% I think is a critical point on the fib is because the big players are always buying at a discount and they want below 50%. So that's why the 50% on the fib is going to stand out. So if I were to zoom back out all the way out to the hourly, and I know I got, let me take this one off, this fib off, because I was just using it for an example. And I can take this off just for right now. And this, all right, so we can see clearer. So, and I can take this off too. So the next point of interest is going to be in this order block from this, the lowest point of this candle, creating a demand, which when it fell down to this this order block, that's when things reverse. So that will be the next point of interest. Not saying I believe it can go to here, but I always take it one step at a time. So I will set my alerts to having my, I usually have a line alert, horizontal, right? So that if I get this alert while I'm doing something else, if I see that the alert says horizontal, I know that the price is moving. If it does not say horizontal and it's saying this price point and it does not mention horizontal line on the alert, then I know the price moved up without even opening up the chart. So that is my little way of keeping abreast of what's going on without staring at the chart all day, right? And keep my trading time, as far as, I guess you want to say working time, as far as staring at the chart, to a bare minimum. Set the chart up, set my alerts, and when things move, that's when I start watching the chart and seeing when it's time for me to move in and go into the trade, right? And set up target for when to come out of the trade. So that's the first thing, is I learned how to get better at finding fake breakouts. And then the next thing is just setting up my chart, which I've already kind of done. I've already outlined my order blocks. I've done mine. Really don't need to do a trend line and just wait for things to move whatever direction it wants to move. I think it's going to move further down, but we'll see, right? And then once it makes its move, then we'll decide based off of that move what to do next. I don't let my ego get in the way and think I know everything what the chart is going to do. I let the chart tell me what it's going to do, and then I make my decision based off of what the chart told me it's doing. So I don't try to be Miss Know-It-All or let my ego get in the way and try to be the all-knowing. I let the chart do the work for me. And then based off what the chart does, because the chart is nothing but the traders. I let them know what is the behavior of the traders, because that's where the money is moving by the people who are trading, the people who are buying and selling. So I want the buyers and the sellers let me know what's happening. And then I use that to determine what my move is going to be. So, and that's pretty much it. Then the next thing is I start looking at the other charts that I am following for more of a swing trade, which will be Solana. So I've already, has one of them I've already set up my alerts for that chart to see. For right now, it looks like it's still moving down. And then the other one is Ethereum. And the only reason why I'm choosing Ethereum is because if I do want to buy some Ethereum based memes. I want to keep a track of what Ethereum is doing, because you got to use Ethereum to buy these meme coins. So, and the same thing for Solana. And then the other narrative for, I think, the bull run for 2025 is AI. And one of the main AI coins that I am really watching out for is Fetch. So I keep a track of what it's doing and set some alerts. So I have one right here. So is it going to go below this order block right here, which is a demand zone so far? And that's pretty much it, right? And I just take it from there. I don't try to make it overcomplicated and do too much. I'm more of a technical analysis type trader. And yes, I do keep up with what's happening, especially with Bitcoin, the market, AI. So I do kind of watch other YouTubers and read articles, and I might even get some notifications on Twitter as far as what might be happening in those arenas. But that's pretty much it. I kind of keep it low key and simple, because that was the whole point of me wanting to be a day trader, is because I want a simple, easy, not a lot of hustle, not a whole lot of people interaction, and a whole lot of freedom. So that will do it for today. Hope you guys got something out of this today, and I look forward to seeing you tomorrow. Have a blessed one.